The European Central Bank is trash-talking Bitcoin, saying it's on the road to irrelevance. Also, we want to talk about the Santa rally, the idea, the theory, the narrative that December could be a very good month for markets. Let's get it. So let's start off with this story that the European Central Bank is saying that Bitcoin is on the road to irrelevance. See, the European Central Bank basically just said that Bitcoin is going to zero. What a surprise. Does this mean that the market bottom is in? Well, it sure does feel like one of those kind of bottoming signals, you know, when you have central banks coming out saying Bitcoin's dead again. Well, in a blog post that they published on their website called Bitcoin's Last Stand, the European Central Bank thinks that Bitcoin is on the road to irrelevance. They say recent stabilization in Bitcoin price is an artificially induced last gasp before the road to irrelevance. And this was already foreseeable before the FTX bust, and that of course sent Bitcoin down to under $16,000. Now that blog post went on to lay out a few more reasons why Bitcoin is bad and focuses on all the false narratives from the past, you know, illegal transactions, regulatory situation, Bitcoin being a reputational risk for banks. They claim that Bitcoin transactions are cumbersome, slow, and expensive, and its technological shortcomings make it questionable as a means of payment. It's a funny story, actually, because I have had a transaction that has been in limbo with my bank for like a month now. No bullshit, it's crazy. And I've got a second international transfer that has not arrived after 11 days. But yeah, keep telling me how the banking system is so superior, man. If those transactions had been done in Bitcoin, they would have been done in an hour and would have had a verification that those transactions had happened. Come on, man, ECB. Liars, liars. Anyway, they went on to say, big Bitcoin investors have the strongest incentives to keep the euphoria going. Speculative bubbles rely on new money coming in. Of course, all this trash talking wouldn't have anything to do with this, would it? Maybe. Well, it seems that the ECB has some projected losses coming up. What a coincidence, trying to distract away from their own chaos by trash talking Bitcoin. Feels like they're looking for a bit of a distraction here. But unfortunately for them, nothing can distract away from the decade-long aggressive money printing, the rising inflation, the rising interest rates, and now the ECB must make large interest payments to commercial banks on the 5 trillion euros worth of deposits that it created through quantitative easing. Remember, central banks are basically the marketing department for Bitcoin, and they never fail to deliver on the goods, which is exactly what the ECB is doing right now. Okay, before we get into talking about the Santa rally, just a reminder, if you don't have an account yet over on Bybit, you need to get yourself one. It's the best place for trading crypto. 0% fees on their spot markets. Over 10 million traders are already using Bybit. And if you use that link down below in the description, you can get up to $30,000 in trading bonuses. So check it out using the first link down below. Now let's talk about the Santa rally. So Wall Street has reacted pretty positively to Jerome Powell's speech the other day, where he came out with a dovish tone. Basically, long story short, he signaled that, yeah, it's likely that we are going to reduce the size of the interest rate hikes in December. So previously we've seen 75 basis point hikes. We're likely to see a 50 basis point hike coming in December. Markets loved that. We saw rallies right across the board. Bitcoin doing a thing here. We actually got Bitcoin up to $17,300 yesterday. Not bad Bitcoin, not bad. I'll take it as a, you know, something to make me feel something again after all the chaos we've seen recently. But the real story, of course, is not Bitcoin in this particular situation, although Bitcoin could benefit from this wider market rally. We see, for example, the S&P 500, big candle on the day, getting the price back above both the 200-day exponential moving average and the 200-day simple moving average. Now, we have not seen the price closing above the 200-day simple moving average since back in April. It's been quite a long time since that happened, so that is quite the noteworthy move. Can we sustain that momentum moving into December? We shall, of course, see. We also see commodities rallying higher, gold pumping up, silver pumping up. Very nice to see those assets rallying along with the S&P 500. And of course, we shall see how Bitcoin plays out over the next few days. Our next major target, as a reminder here, is around $17,800 for Bitcoin. That is, you can see an area of price resistance here, as well as lining up with the 50-day exponential moving average. So that is our next key area on our way back up. Obviously, the dream here, the dream is to get back above $20,000. Maybe that could happen in the month of December if we don't get anything knocking us too far off kilter. Now, the idea of a Santa rally. So equities tend to perform well at the end of the year, and generally, right, unless some crypto-specific crap happens again, which kind of already has happened. I mean, I feel like Bitcoin would be doing a lot better right now. Had the FTX collapse not happened, we'd probably be at like $25,000, $26,000, $27,000. Instead, we're all the way down here because of what has happened at FTX. Had all things stayed the same, I think we would have been doing a lot better because Bitcoin does tend to fall along with equities. But we diverged, we decorrelated to the downside because of FTX. Anyway, so equities tend to perform well at the end of the year, with the 2 weeks before Christmas tending to be quite good. You can see on this chart here, usually October, November, and December are good months for markets, and we gain momentum actually heading into Christmas. You can see the uptrend there. So will we get that this year? Are we due for a Santa rally? We got to remember, just because some things sometimes happen in markets around certain months based on, a broad range of factors doesn't always mean it's going to be the case, right? We've definitely seen months where Decembers have ended with a big price move down, right? After maybe a blow off top or something like that. So that is worth keeping in mind, but usually this is what happens. This time different, I guess we shall find out, but markets still could face some headwinds, so you do have to keep that in mind. We have the Federal Reserve meeting on the 14th of December. We have the CPI data coming in on the 13th of December. FTX contagion for crypto could still be spreading. We still don't have a definitive word on if Genesis is going to be okay or not. Seems like they might be avoiding a bankruptcy, but you never really know until it happens, right? Of course, we have those recession fears continuing to grow. We have layoffs increasing, as this MarketWatch article here points out, as tech layoffs continue. We see right across the board some companies cutting 10, 20% of staff. That's, we're talking about hundreds of thousands of people being unemployed here. Russian price cap on oil coming in a few days as well. That could cause a bit of uncertainty or chaos in the energy markets. Maybe Russia's been able to simply divert enough oil. Russia sells enough oil to India and to China, who then resell it to the Europeans at a markup. This is what's been going on for a lot of the year. It's probably going to continue going on. China and India just buying up all the oil and then rediverting it over to Europe where they make a nice profit on it. It's a crazy situation, but anyway, this is what we have seen happening and the kind of things that are worrying the market right now. But that being said, if inflation keeps falling, that is to say, if the CPI data actually shows that, hey, inflation's down again, that's good for markets. If the Fed actually does come out and say, hey, we are doing a 50 basis point instead of a 75 basis point rate hike this time, that's good for markets. Markets are going to like that. That provides fuel for an end of year rally. Contagion could actually be over from FTX. Genesis might actually end up being fine, and there might not be any other big players that are taken out as a result of the FTX meltdown. Right? Recession fears, we can talk about that next year, man. Let's have a good December. Let's wait on recession fears. We all know that's something we can talk about later. Layoff impact, well, that might actually take a while to be felt in the economy, right? So maybe some time before that really has an impact economically, right? These are sort of lagging things, right? Everybody loses the jobs, so they still have some savings, some credit cards they can max out, et cetera, before it really starts to have the impact on consumer demand and all this kind of stuff. And of course, that Russian price cap for oil may end up just being a big nothing burger. So you have to keep that in mind as well. And I think this is the perfect meme to finish off our conversation with here, is that, we have this idea that basically everyone's thinking, no, there's too much contagion, too much craziness. It's only the beginning of the end, et cetera, but actually, maybe December's just looking good. We shall see, of course, how things play out over the next few weeks. Okay, that's it. Subscribe now. See you next time.